Hey, welcome to the Closing Beat, everybody. Happy Friday. How you doing today? Hope you had a good week here so far. This is our daily show that we do. We call it the Closing Beat. It's a stock market update show that we do, and we'll cover the markets, all the good, the bad. Got a lot of interesting things here for you today in terms of some geeky stuff, if you like the geeky stuff. Had a little extra time today, so sort of went crazy. Sorry. We're also playing a game. It's called Guess the Dow. And basically, you just go to the website at the bottom right-hand corner of your screen there, and you take a guess. Answer a few questions about where you think the Dow is going to close there. If you're the closest without going over, we'll send you a $100 gift card. Or if you're one of our customers, we will credit your account $100. Our winner this week was a customer, Enrique B. He's a client of ours. Guessed 26948.1. Was within 10 points of the guess there. So very well done there, Enrique. We've already let him know that we're going to credit his account. And so keep in mind, if you're one of our customers, doesn't matter. If you've already contributed the max, we can credit your account. And even though it does go over the max, doesn't hurt you. No penalties, taxes, or anything like that. Interestingly, in second place was also a customer of ours, Richie O. I won't say the last name there, but they were the second closest. Sadly, there are no prizes for second place. So Richie, congrats on getting so close, but try again next week. There's no rules to play. You can play every single week. I mean, there's rules to play, right? I mean, who wins and who can play and all that. But if you're not a customer, you're welcome to play along as well. And if you'd like, we'll send you a $100 gift card. That's that. Every Thursday, we do a class for customers. Last night, we did one on our new high-interest checking and savings accounts, and so we just kind of went over that. If you are a customer, you want to check that out, that's cool. No problems there. It is not like I said last night, it's not a product that we're offering in terms of like we're making money off of it or anything. It's just something I personally wanted. Selfishly, I sought out to go get it. I got it. And so now I said, well, can we just offer it to all of our customers? And so that is the case. You can go check that out there. Also on our website, you can check it out if you like as well. Let's talk about the stock market here today because you got a decent day, right? The Dow was higher by 152. The S&P added 12 and 57 on the NASDAQ. You got some China trade news that they're going to hash out phase one of the deal, and maybe we get this done before Trump and Xi meet, or maybe the official signing is when they meet. Still a lot up in the air, I think. You know, although today was positive, I think there'll be a little drama before all comes to an end. I saw overnight that China was going to ask the U.S. to lift the tariffs while they, in exchange for buying more agriculture products from us, while they hash out the rest of it. I don't think that's going to happen there. So probably a little bit more drama still there. But you also had earnings come out, lots of earnings this week. And Intel was the big focus today. We'll cover that stock as well. We very nearly hit a record high today. If you happen to be following along in the stock market, let's go over to the S&P. I'll look at the E-mini S&P futures just to get a direct look at it. We've been talking about the known resistance area there and how the market's pulled back 7%, 6%, and now they're hitting those highs again. You kind of don't want to see it pull back from here. You'd like to see it take a break or go sideways and then break out. Honestly, if we start to pull back, you're just going to have so many people that give up, right? They're just going to say, well, forget it, right? This is the top, and oh my gosh, I'll sell my position. So you're kind of happy to see that. There's no real good reason for it to break above highs today. You have a little overextension in a few different areas there, but I don't think anybody's complaining, right? A little 0.5% day on the day, that'll do. Year to date, the S&P is up now 20.6%. If we go over to the Dow's, decent day for that one as well, shrugging off some of the earlier earnings in Boeing and Caterpillar, 3M, etc. And so not bad there. It's a little bit weaker in the short term just because of those earnings there, but the Dow is still higher on the year by 15.6%. It actually ties the Russell 2000 now for year-to-date gains. Russell is also up 15.6%, although you'd never guess it because it hasn't really done anything since about the beginning of the summer. But still, happy to see that move a little bit higher. It was one of the overperforming sectors today, if you happen to be paying attention. And the NASDAQ did the best. That one, we've been talking about this known support area, which was resistance. All looks good there. Moved back to these highs as well. The NASDAQ's the best performing sector of the year, as a lot of times it does. 24.2% year to date, thanks to today's gain of 1.37%. So hopefully that helps you there. In terms of the overall markets, let's talk about earnings. You've got the number of companies in the S&P that have reported earnings. 78% of them have beat on earnings. So not bad, right? Still pretty much early in the season. We're almost at the halfway mark there. I misspoke yesterday when I said we were at the halfway mark. We're almost there. Just be specific here. Of all of the companies that have reported earnings, whether they're in the S&P or not, you have 527 names that have reported third quarter earnings results. 11% of them have lowered guidance. meaning they had Amazon, right, lowered guidance today, which 11% is pretty low out of the 527 names. If you look at about the halfway mark of earnings season and you find any other time that we had 11% of the companies reporting lower guidance, it's not very often. So there's some good and bad in the earnings season out there right now. I don't know if you guys like to dig into things like that, but of all of the companies that have reported earnings, 28 of them have beat on earnings, beat on revenue, and raised their guidance. That's low as well. So you had a pretty positive comment there, and now you got a pretty negative comment. Was 21 yesterday, so we're improving a little bit, but it's not really good so far, considering that we've lowered the bar for a lot of companies. Now that does factor in, by the way, companies that just don't report guidance as well. I don't have a way to filter those out at the moment. So overall, it is pretty low there. And if you're curious, some of your best performing stocks so far on earnings, you might have guessed the first one, Tesla. Today also a great day, but a big gap up yesterday from their earnings announcement and sort of a replication of the performance today as well as volume. So Tesla, one of the better performers there. Harley Davidson, you wouldn't guess it, but they were one of the better performers on earnings there. Nice gap up and decent pullback there to give you an opportunity if you've been following there. Winnebago. So this is one of the better performers. I didn't cover it when they reported earnings, but this is one of your better performing earnings stocks. It actually comes in third place. And I didn't go in order, sorry. Second place would be Polaris, guys that make jet skis and four-wheelers and stuff like that. So they did really well also, if you happen to like looking at stuff like that. If we go through the individual sectors today, it was basically across the board a rally. You look at all the different sectors today, whether you're looking at transports, semiconductors, tech stocks, even oil exploring stocks there, retail, regional banks, they were all higher by 1% or more. We talked about the regional banks being stuck right here at this resistance, and it remains stuck at that resistance. Nobody wanted to make that bet on a Friday that somehow it would break out, although you've got a nice setup going into Monday that this has the chance to, well, it's shown that it has the energy to break above those highs there. So we'll come back to that one on Monday as well. On the downside, you had REITs, pretty nasty drop for REITs there, down 1.2%. Well, you have the trade news coming out there. You have yields rising, and so you have really no need for some of these protective, I don't want to say defensive, but some of these sort of run and hide sort of sectors of the market. And so they pulled back pretty nicely on the day. Utilities also pretty aggressive pullback there. This is now the fourth time just this month, right? I know we're getting to the end of the month, but this is the fourth time just this month that the utilities have fallen 1% or more in one day. So this is number 1, number 2, number 3, and number 4. If you want to go back and look, that's typically not a good sign for a stock, an ETF, whatever you happen to be looking at there. I mentioned rates a second ago. They did start to sell. I'm sorry, rates were higher, prices went lower. It's always a little confusing when we say it. But largely quiet going into the Fed announcement there. The Fed also quiet as well. They won't be speaking until they give their announcement next week. And then you got the 30-year, of course, as well, a little bit lower, which means rates were a little bit higher on the day. It was a decent move today, but quiet. It was not like it was a large move or some above average move, just a little uptick in rates there if you happen to be following along or participating. I mentioned semiconductors. That's going to be mostly because of Intel. We'll cover Intel in just a second. The semiconductors did poke up to new highs. As you can see there, 11% of the SMH, if you're following, is Intel. So if Intel has a good day, you can sort of understand why the sector in general gets pulled along with everything else. Although on our 52-week high list today, there were a lot of names actually in the semiconductor space. KLAC, Lam Research is LRCX. Also to new highs again. These were both new highs yesterday, and AMAT also new highs yesterday. So gives you an idea that it wasn't all because of Intel. Intel certainly helped, but these sort of less heavily weighted names also played a part in the role today for the semiconductors. So all is good there. Remember, you need the banks and you need the tech stocks or semiconductors in order to get the markets to move. Today, we had the banks, there you can see it, XLF, and of course we had the semiconductors, so all looking really good there. Oil, we didn't talk about it a whole lot this week. It had a great week. This was a 4.5%, just over a 4.5% gain for oil on the week, one of its better weeks that we've seen in a while, so a little energy building up in oil, especially in the oil service stocks. You also had good earnings from a lot of different oil service names in there, so not that that affects the price of oil, but certainly helpful in terms of the sector ETFs. Okay, let's go over some of the stocks here and dive in. Okay, Here's your sort of geeky thing, one of the geeky things for the day. Intel gapped above this range. We talked about this yesterday, although I didn't cover the earnings a whole lot. Intel comes out, they reported earnings that were better than expected by 18 cents. Revenues were good, and they raised guidance, right? We talked about Texas Instruments the other day saying that the slowdown in this space typically lasts 4 to 5 quarters, and this is the 4th quarter. Intel basically came out and gave the all clear that everything looks good. That was very bullish for that one. If you go over and look at Texas Instruments, had a great recovery day here, largely because now people are saying, oh, well, if everything's good, could I go buy semiconductors now? And so that was very helpful that they raised their guidance going into this one here. It gapped above the range. We talked about that yesterday, so nothing new there. You know what's going on in terms of that. You also have, for my really geeky technical traders, you see what happened down here? When the blue line crosses the red line and both lines are rising, that's a positive signal. Usually it's a positive signal. So the fancy way to say it is it's a golden cross. A golden cross is when the 50-day moving average crosses above the 200-day moving average, and both the 200-day moving average and the 50-day are trending higher in the short term. Well, you have that. The red line's a 200-day trending higher, the blue line, the 50-day trending higher. It's just a very popular technical pattern that people like to look at. If you go back almost 30 years for Intel, shows you how caught up I was today. If you go back 30 years on Intel and you say, show me every time that this happened. I want to know every single time this happened, show me the performance going forward. Well, in the short term, the stock tends to pull back just a little bit. Over the next week, it is down 53% of the time. By about 1/3%. So in other words, over the next week, it's sort of unpredictable. It generally has a small pullback after giving you that golden cross there. For the investors out there, if you happen to own the stock, well, you're obviously pretty happy today. We happen to own it, so I mean, obviously this is all good news. But if you happen to own the stock, you go, well, yeah, but what does the golden cross mean going forward? 6 months, a year out? Well, we look at that too. 6 months out, the stock shows an average gain, 6 months out from the golden cross. Stock shows an average gain of 18%, and in fact, it was only lower 4 out of the 15 total times that this happened in the last 30 years. So is that enough data? 30 years looking back? Hope that's helpful there. And if you go out 1 year, the average gain is it's just over 30%. It's about 30 1/3%, with also only being lower from this very moment 4 out of the last 15 times that it's happened. So if you like these technical things, then you're sort of excited by that. If you like, hey, I'm just going to own the stock anyways, I don't care, I like Intel, I want to be a part of it, well, that's one of those extra things you put in your head and you go, okay, the momentum is on my side for the 6 month and 1 year time period. Over the next week or so, the momentum may be against me. It may be a little bit sort of weak, it may chop around, it may pull back, it's okay. You know now that that is totally acceptable for Intel, and I believe that is all I have to share with you for Intel. Amazon gapped lower today by, well, it was about 6% on the morning there. We look back to see, and it's actually a pretty common occurrence for the stock to gap down 6% or more. It's actually happened 1/3 of the time every earnings season. So if you look at every single earnings season, you go all the way back to their first earnings report, 1/3 of the time it gaps down by 6% or more. So you say, all right, it's kind of common. It looked nasty to start the day, but all in all, not too bad. And investors came flying to this one and said, okay, I get it. So the stock missed on earnings. They missed by 26 cents, which sounds like a lot, but not too bad for Amazon, considering we're talking earnings per share in the 450 mark. So not a big deal there. Stronger revenue, but they lowered guidance, and they didn't really have a lot of great things to say about the holiday season, which is what a lot of people focus on for the quarter three conference call. Nonetheless, they talked about some interesting things as far as AWS, and a lot of people think, okay, now Amazon is going to spin off. Remember when Google, they said, okay, now we're going to have Google and we're going to have Alphabet, right? Amazon's sort of thinking about the same thing, or reportedly they're thinking about the same thing. So they're basically saying, okay, now we may have Amazon and then we may have AWS. They also said they're going to spend about $1 billion to build a new facility in Argentina. I don't know if that's a lot or a little, but there's a lot of conversation around, okay, there could be a spin-off here in the future. It would be a great time to do it, in my opinion, but we'll see. So that's that one. Okay, do you like Visa? I think someone mentioned it the other day, so I thought I'd point this out for you guys here. Visa had a strong day today. Come on, there we go. Visa up 1% on the day, and very decent reversal there. Anytime a stock has a big sudden move lower and can reverse it like that, you tend to think bullish in the short term. So I think a lot of technical traders will look at that. Interestingly, it stopped at the prior resistance area there, right? So everybody's obviously looking at the charts on Visa there in the short term. Anyways, they reported earnings there. They beat on earnings. Revenues were basically as expected. Guidance was basically as expected. No shocker there. Everything was nice and clean. And I found it interesting. I like looking at these financial companies to see, like, how do they brag about charging you more? You know what I mean? Because you ever think about that? You have Visa, MasterCard, people like that. You know they're charging you. And if you're a merchant, then you know they're charging you, right? So how do you report to your shareholders that everything's great, we're charging a lot of money and making a lot of money without pissing off the very people that use you as a service? So I find that fascinating, especially when it comes to, like, you know, JP Morgan or Merrill Lynch and stuff, and they're talking about how much they charge their high net worth clients and how smooth they are about that. Anyways, Visa raised their swipe fees. So if you use them as a merchant, you may already know this, but they raised their swipe fees. I believe it was last quarter when we talked about their earnings. Anyways, they saw the benefits of that, obviously, better earnings overall, or bringing in more money, and they said, you know what, we're probably going to raise the rates again. It went so well, nobody seemed to care. We're just probably going to raise the rates again next year. And so obviously people think, well, if the first time you made more money and you raise the rates again and nobody cares, wouldn't you make more money? Therefore, the stock would be worth more. So that's sort of the really layman example or explanation of what happened with Visa in terms of earnings. Can I go over a few more with you? You want to do this? Let's take a look at Mohawk. They reported earnings. I just found it interesting that it broke above the 200-day moving average and seems to be rather strong in the short term here. Lots of volume today on that one. Could be short covering overall, but seems like the momentum picking back up on Mohawk if you're following along with them. Verizon, a rather volatile day actually, not normal for this stock on earnings. It's typically pretty quiet. They reported earnings as well, beat on earnings, revenues was good, everything was basically good with Verizon, but had a rather volatile day there. I'm not sure if that was some rebalancing going on. I don't know. Alaska Airlines is the latest airline to enjoy their earnings boost there. We talked about American Airlines earlier in the week, Southwest Airlines, I believe yesterday. And Alaska Airlines came out, reported their earnings there as well. Same thing, if you're following along with this, the average revenue per seat mile, very good. Costs were very low, lots of high demand expectation in terms of sales going forward. So it was just positive. I mean, you can read into some of these if you like, but at the end of the day, it's just like good news, good news, good news. They're doing great. Do we want to cover any more? Do you have Aflac? Aflac reported as well, one of the later insurers to report 1 1/3% on the day. They beat on earnings by 9 cents, raised their guidance going forward in terms of earnings, so they didn't accept what Wall Street said in terms of lowering the bar. They said, even though you lowered the bar, we're raising our guidance and sort of telling Wall Street, expect a little more out of us. That's bold. Yeah, I like when companies do that. That's bold, and obviously investors like that as well. Stock broke through resistance today and also higher by 1 1/3%. 67% of the S&P is above the 50-day moving average. Not a big change from yesterday. Only 66% and now 67%. So we dug a little bit deeper on this one. There are 59 names in the S&P 500 that are within 2% of crossing above the 50-day moving average. So if those did have a good day, and maybe some are due to report earnings, if they did have a good day, you could very quickly see us jump from 67% up to 79% if we could get all those stocks to participate. And if you're curious, you want to cheer on a few stocks, you got General Motors, very much about to break the 50-day, and that's the blue line as we go through some of these charts, if you're following along there. So General Motors almost there. That's helping us out there. You'll want to cheer for ExxonMobil, almost back above the 50-day. Struggled with it throughout the week, but almost back above there. Eli Lilly. This is the earnings drop here the other day. Very much bullish in the short term. It got bought up rather quickly. That's almost above the 50-day. And then Amazon, of course, I don't know if you noticed it earlier, almost back above the 50-day despite gapping down by 6% today. So you have reason to expect volatility in that number going forward. It's just a breadth measurement. I mean, if you care about that, that's why I like to dig into those. But that's all that is. 35 new 52-week highs today, representing 8 sectors. That hasn't happened this week, so that's good news there. We talked about the semiconductors like AMAT, CLAC, and Lam Research all hitting new 52-week highs. You had some of the bank stocks, JP Morgan, just poking a little bit more, 0.8% there. On JP Morgan, Bank of America poked up there a little bit, added 1% actually by the end of the day, and Citigroup hitting new highs as well. So those are some of the 52-week highs. And then the same oil, relative strength oil names like Philip Morris, great sort of blow off top on that one today, 3.5% to the upside. They hit yesterday as well. And Valero continues this sort of reverse waterfall to the upside. So it gives you an idea. It's becoming more and more extended in the short term. You do not expect that to continue there. Some of our stats plays, let's do it. Travelers didn't really do a whole lot today, but the stats on that one, 100% of the time in the next 5 days, it is up by 2.86% on average. And I put that line on the chart so you can kind of see. This would be, there we go. I want to update my notes on this one. So this would be the first day of that, and it moved a little bit lower on the day. So we got 4 days left until we head back up to this line. We'll keep following it. Like I said yesterday, I'm always leery when something says 100% of the time, but those are the stats, so we'll follow that one there. HCP gave us a big pullback today. It had to make it to this line, and it basically doubled that. The stats on that were 61.5% of the time. It falls 1.15% in 5 days. It only took one. It took today only to hit those lows, so that one is done and over with if you like the downside sort of ideas. And did you see LHX, by the way, stopped right at that number? See how it stuck today? You think we're the only one that focuses on these stats? I love pointing that out. So all the algorithms, the computer trading systems, they're all looking at the same thing. I'm nobody special. I'm just the guy that points them out. I find the stats interesting, so I share them with you. But when you go back and look at some of these right where they stop, it's sort of fascinating, isn't it? Anyways, we'll stop talking about LHX now, and I will move on to your questions if you have any. Before we do that, and as you type your questions, you've got next week, Spotify, Akamai, AKAM is a symbol, another semiconductor stock. You've got a couple of the oil service stocks, NOV and RIG, Diamond Offshore. Not Diamond Offshore, just NOV and RIG, actually. And then you got WellCare coming up as well. So that's that. All right, if you have any questions, I will take my shot here and see what I could do to try to help you out. We'll start with Kyle. How do you feel about Uber? Feel like it's a discount compared to potential? The CEO is kind of motivated to innovate. Doesn't matter really what I think on that one. Every analyst is positive on Uber. And we covered this last week. Profit targets between like 41 and 47. So it's sitting at 32 right now. And every analyst, I believe they're all either a buy or a hold. They're all saying up here in the next 12 months. So, I mean, despite any comments I may have, those people study them a whole lot more than I do, so they seem to be on the same page as you. You might be right, yeah. Or at least you know you're playing along with people that also feel like they're right. Oh, Harry's got some comments there on AWS. There you go. Yeah. You think Tesla's still a steal? Okay. You think the market euphoria is about to end, another short-term pullback, loading up some shares? Oh. So you're buying puts on your positions there. Depends on how big of a pullback you think. I'm not usually a fan of buying puts for protection. If you think it's going to be disaster, of course, I can understand doing that. In general, I'm not a big fan of doing that. If you think there's just going to be a shallow pullback, why not sell some calls? Or sell half the calls of the positions you have or something. I know it's not a real protection, but it lowers your cost basis in general. I just don't like the idea of having a low odds possibility of the protection working. That's kind of my view on that one. Taking a shot on your first options play with TVR. Why TVR? Out of curiosity, if I can ask there. Or you meant travelers. Why? I meant to type. You might have said traveler. I meant travelers. Curious what it is, if you're willing to share, Adam. What'd you do? Kyle's about a year into it and learning. I love it. Show, welcome. First time joining live. I love it. We've commented on leveraged ETFs in the past. High carrying costs there. Understand the drag on leveraged ETFs before you do them. Please understand the drag. That's a good question, Mark. If they don't cut rates, will the market go up? Last couple times they cut, the rate market went down. You got me. 50-50 shot, I guess. Yep. What does a flat 200-day moving average mean? A flat 200-day moving average just means consolidation of an uptrend, right? So when you pull back after a consolidation of an uptrend, people tend to find that 200-day as support in the short term. Travelers would be a great example. You could see how a rising 200-day moving average, people don't like to see that as much. You typically don't see it as support because what do you have? You have a pullback to support after a massive, massive rally in a really, really long rally. So you picture a stock or a person running up a hill, takes a break, runs up a hill, takes a break, runs up a hill, takes a break, runs up a hill. How long can you run up a hill, really, like the average human being? Stocks are the same way. They live and breathe the same way there, not to sound really like hippie about it. But when they pull back, the 200-day moving average rising is just telling you, hey, that stock's coming out of a very long uptrend there and likely won't just stop so quickly and turn around and continue an uptrend that may be a little tired there. So rising 200-day moving averages are always a little bit weaker. I forget the question. I'm sorry. I ramble. Airline stocks headed higher after the 737 comes back on track. I do, however, I don't think you'll get sort of the initial reaction, but you don't really get to see that money hit their pocket until the next earnings cycle there. So, yeah. Yep. Yeah, cool. Any thoughts on Roku from here? It's competitive. There's going to be a lot of chop in there because now you have comments from companies that are competing, like Comcast, and you have comments from Roku, which are trying to make themselves seem like they're still the dominant force, and they are. But you're going to have a lot of chop in there, so expect that this is a stock, if you participate, that you will have volatile up and down days. As long as you can live with that, no problem. Enrique's here, our winner of the Dow game. He loves it. It's easy to love a game you win. Yeah. Kevin's got some Tesla there. We are a happy camper there then this week. Nice. Nice. So on Travelers, okay, thank you for telling me that. So on Travelers, you bought the 130 calls for 235. Let me see if I can see what you did there. And for November, okay. You bought the 130 calls for 235. Yep, so you did. I'm going to guess, yeah, you did, since you're playing the stats deal on there. Sweet. Keep in mind, you have a bit of a disadvantage because obviously time is moving against you. So all of that money is time value right now. You really need the stock to get rolling there. So know the game. Just careful there. Yep. I didn't have AT&T on my list today. They report on in the morning there. Let me see if I can find you something. I only have so much room to put stuff on there, and once I fill it up, I move on. So you've got AT&T there. There you go. Reporting in the morning, they expected 94 cents a share. They beat 56% of the time on earnings, 47% of the time on revenue. The average move over the last, well, you're going way back there, last 70 quarters. Average move is a small gap to the downside of a quarter point. So not really a big mover. You're not really expecting a big move there. If you look back over the last third quarter earnings, third quarter tends to be nasty for this stock. So last year, third quarter, the stock gapped down 4%. The year before that, third quarter gaps down about 2%. The year before that, 2.5%. Out of the last 10 third quarters, 1, 2, 3, 4, 5, 6, 7, 8, 9, and well, I'm going back more than that. 10, 11, 12. So that goes back to 2001. So every third quarter since 2001, 12 of them, 13, 14, 15, 16, 17, 18, this will be 19. So 12 out of 19 third quarter earning reports, the stock gaps lower. I'd have to say the odds are the stock's gapping lower. I wish you well on that one, but that part's not so good. Now, the good news is it's already fallen a little bit, so that's helpful. If you do see it gap down after already falling so much, day traders and the momentum, short-term sort of momentum traders will try to play counter trend on that. So like Amazon did today. It was down a little bit and then it gapped down. Some people look at that and say, well, there you go. That's a buy. So be interesting to see what happens. I like it. I can't say entry point specifically. I mean, I could say on Facebook right now, you kind of have dead money, right? So if you're looking for just a all clear kind of sign to buy the stock, it'd be anything above this 192, 193 area. You know that that's a problem area. Every time it hits there, the computers, any technical traders go, well, that's a known resistance. It just did it the other day. So if you're going to be a long-term hold on it and you just want a short-term entry, you either want it to fall so you feel like it got a discount, or maybe just wait until it breaks above that so you feel like you're not putting money to work that's going to be quiet or dead for a while there. That's probably the best I can say without getting in trouble. Oh, or you own some of it. Yeah, so same comment there, even if you do own some of it. Yep, I gotcha. I see what you're doing there. Time does matter in options. Actually, in 2 weeks, we're going to start the first series of option classes for our customers. If you want to see the classes that we do, they're on our website. You click on events, and you can actually see the different classes that we have scheduled coming up. Next week is going to be trading plans for the active trader. Options part 1 will be the week after that. Due to popular demand from our customers. So that one will be maybe a longer class, but yeah, you got it. You got it. Does PayPal, yeah, see, things like that. I mean, does PayPal get back to all-time highs in 2019? If I had to guess, I would say no. I have nothing to back that up other than just looking at thousands of positions of stocks all the time after getting beaten down like that. If you wanted to make a bet with me, I would say no. Unless you wanted to bet a lot of money, and then I'd just go bet on something else. But you know what I mean? Like a friendly bet, $1 between each other, I would bet you no. It would not. If that helps. Let's keep track of it, though. Why not? I call it Budweiser, AB InBev, lower today on... Oh, did you buy that? So you like the dip today. Weak China numbers, man. And they didn't even report all the China numbers, I believe. So a lot of weakness there, and... That's one of their bigger players over there. So you can understand, 10% down day for them. Yep. Cool. I love it. I love it. Well, I think I did it. I did cover everything I was hoping to cover. So I will let you guys go enjoy the rest of your weekend. I appreciate you guys watching. And if you need anything, you know where to find us there. But we'll be back on Monday to do this all over again, continue with earnings season and everything. And enjoy. Yeah, we'll see you later. Have a great weekend.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.